Now, these are 5 shocking mistakes that you should avoid as far as the bank loans are concerned. In the last 1 week, I've met 3 different clients who, what do you call them? The auctioneers are the doorsteps of getting things from him or from them just because he was unable to pay back the loans. And I was compelled to make this video so that I can be able to share with you. You avoid these mistakes. If you read the data from the financial banks or from the financial sector, they are saying, hey, we have a lot of NPLs, the non-performing loans. Some of them were issued unsecured way, others unsecured, and people are unable to pay these loans. I don't know whether you guys read a certain circular that was going on from, I think, I really wish I can remember that. It was saying that people are unable to pay even a debt worth than 1,000 shilling and below. They were unable to pay. That's like $10. They are unable to pay. And people are borrowing heavily, either from the apps offered by the loans or rather by the banks or something like that. So these are 5 shocking mistakes that you're supposed to avoid when borrowing money from a bank. This is Good Joseph at all the time. Make sure that you hit that like button. Make sure that you subscribe, and let's stay put. Are we together? Number 1. Don't forget to subscribe, by the way. Number 1. It is borrowing because you can afford, or should I say, let me put it, I usually list all my things here. Borrowing because you can, not because you want. Have you ever seen people who borrow because they can? Borrowing because you can. What do I mean? Okay, you've just gone ahead and asked your bank, how much loan do I qualify? Then they tell you, oh, you qualify for 10,000. Oh, wow. Then I can borrow. What was the problem? Yes, I want that money. See, you're borrowing because you can. Again, I meet a lot of clients who are telling me, hey, my bank is calling me. It's telling me, hey, you can you can borrow up to 2 million, up to 3, up to 10. You qualify. You have a very healthy financial records. If you check your bank account, everything is doing good. Hey, come borrow money, come borrow money. You get the thing. Now you feel like, oh my goodness, my bank loves me. See, they are looking for me to give me money and something like that. So you end up borrowing that money. But you're borrowing that money without a strategy. You have a very good business that is doing fantastic. Everything is running smooth. That's why they are calling you, because they can see their money is trickling in your bank. And guess what you do? You end up borrowing because they have told you to borrow. But you're borrowing without a strategy. Sometimes, do you know by the way you can have an excess cash in your business? Let me tell you one thing. You can have an existing business here that is operating at a cash flow of, say, 10 million in a month, for example. Okay, then you are told, hey, you can qualify for another 5 million. Then you borrow the 5 million. Then once you try to put in this 5 million into an existing, you find it is becoming an overflow. It is excess. You don't have a way of using this money. The money is almost lying idle. Let's say, for example, you have the capacity to, let's say you are a supplier of cement, for instance. Let's say you are supplying to, in a month, usually supply 10,000 bags of cement, for instance. That is your capacity. When you do all the advertisement, when you do everything, that is you. You're operating at your optimum. You're at saturation point. Then you have an extra 5 million to purchase an extra 5,000 bags of cement in the similar month. But you still find you still clearing the initial 10,000. So you're still left with an excess stock of 5,000. And on the other side, the bank is asking you for their money each and every month. But sure, you can afford to pay, but then you have the stock here that you have not sold. You find that you're having excess cash in your bank or in your business that you cannot, how can I say, transform it into a money. Like you cannot make money out of that money just lying idle. I've made several businesses in that manner. You know what, Joseph, I borrowed 4 million, but I'm trying to find a way of expanding this business. There is no way. Probably you do not have a good system. You cannot scale the business. You can't expand. You can't sell more because the budget for your advertisement, let's say it's 1 million, it never go beyond that. So you find you're having excess money because you borrowed just because you can. You did not have a strategy. That is one financial mistake when it comes to borrowing money. Do not borrow just because you can. Borrow because you want that thing. Actually, I should say you need it in your business. And not only need it because your business is doing poorly. No, again, there is a mistake. You borrowing, that should be mistake number 2. Borrowing because your business is performing poorly You do not have the stock. So you want to borrow to stock the business, but you do not have the capacity to clear the stock. Probably your business is going down because you have, say, poor products, poor quality. Probably the business in that particular area, there is a big fish who is beating you hands down. So even if you add another stock, you cannot survive. You need to change the strategy. So you end up finding that you borrow to have the stock. You have the stock, yeah, you thought it is because of stock. Now the business is not moving. Now you have the stock, but still not moving. Now what do you do at that particular point? That is where now you realize the auctioneers are on your doorstep. They are there to take anything and everything that you have so that they can pay back the loan. Are we together? That's mistake number 2. Mistake number 3, treating what we call, let me see. Treating grace period like a free money. Actually, there is nothing like a grace period when it comes to loans. That's a fact and that's a reality. These guys have done all their mathematics and they know. There's nothing like a grace period. Whatever they are charging you, I don't know, transaction fee, I don't know, loans due what, and whatever, the fact remains there is nothing like a grace period. It's like when you go to a bank and then you realize they're selling a certain pack of detergent and then there's like a small one attached there. And then they're telling you it's on discount. There's nothing on discount. Probably one of those two products, one is going bad in a very few weekdays or few days. They are seeing it as a loss. Or in one way or the other, by virtue of you buying the bigger one, the price of the small one is already there. In one way or the other, there's nothing free. That's what you're supposed to understand. This is called the psychology of selling. They tell you, oh, discount. Then they write it in a very big way. Discount. Oh, get one, buy one, get one free. No, there's nothing like you're getting one free. No, they do their calculation. They realize, let's say shop A has been selling this. Listen, it's like you selling or being in a business and then one day you decide to treat your customers just because you have been making a lot of money from them. The fact remains there is nothing free. To you, from an average consumer, might think it's free. No, it's not. So the grace period, it's not free. Interest often start accruing immediately, even after payments are what? Are deferred. So that grace period, you've already paid for it. That's for fact. You didn't see it, but you paid for it. Now, the other thing is to take a small loan or a short period loan to cater for the long period loan. You have a loan, say, going for 5 years, and then you take a loan for 12 months to cater for the 5 years loan because you feel it is going for too long. I'm telling you, that is a ticking time bomb that you're getting yourself into. Why? Because now, sure, you may clear the 5-year loan, or you may have yourself what you call the breathability allowance, but when you are having the loan that is so confined in a short period of time, you can get yourself in a messy situation. At that particular point, you might be in a messy situation because there's something called liquidity. When it comes to business and loans, they are very liquid engagements, meaning they need money. They survive on vitamin M. And liquidity on loan, when you constrict the period of time, but you need a lot of money and you do not have a capacity to raise that money. And that's why I find sometimes it makes sense to borrow for a long period or to borrow long period loan to pay a short period loan. But when you do the vice versa, can shoot your foot. Again, still borrowing for long period of negotiating your loans to say them add more years. It means you paying more to them in terms of the interest. That's for sure. Because them extending or stretching or restructuring that loan for a long period of time does not mean it only gives you a little bit of a breathability allowance, but it stretches the loan interest. So you end up paying more. Number 4, when you borrow your money to start a business, for example, a business that you have never done, you're starting it. You're borrowing to start a speculation. You're speculating, you are thinking, you are hoping, you are wishful to borrow to start, say, clothing business. Probably you are passionate. People have been telling you you are good in fashion. You start that. You might be good in fashion, true, but you might not be good in business. You know, there is an argument that people say, hey, if you're a teacher, you can be a very good school owner. No. You only know the technical aspect of teaching, not starting the school. You might be a very good engineer, but you cannot start an engineering business. Those are two different things. So you speculate, you borrow to start a business. And the first mistake that people do is you borrow. You see, when you're starting a business, there are two things that I want you guys to understand. There are things we call them the strategic and non-strategic. Let's say you want to start selling milk, for example. You borrow money to start selling milk. The fact remains, it is the milk that is you are selling here. It is the milk that is making you money. Then there is a house or a room where you should be having your business running. In Kenya, we have a law whereby you have to paint your house white. You have to make sure that you assume the highest standards of cleanness, meaning the lighting must be there. See, now you're borrowing a fraction of the money is going towards all the styling, branding, and whatever, buying those buckets, measuring cylinders and fridges and freezers. You're not selling all those. Those are non-strategic things. You're not selling them. They're not making you money. The only thing that is making you money that is strategic here, it's the milk. That's all. Milk. That's what is making you money. Now you find somebody is borrowing 100K to start a business, and a whooping 70K goes towards renting, licensing, permit, painting, whatever. Only 30,000 is put towards the buying of the milk. That is a problem. It can actually result to a disaster. So when you're borrowing, it is good to know the cash that I'm getting, I'm going to channel that towards the strategic things. The last one is borrowing without a blueprint. This one I've actually discussed it. Are we together? You just borrow and you do not have a blueprint. You see, when you're borrowing, you must have an exit plan. I'm borrowing this money because this is my exit plan. I'm borrowing X amount of money because I want to do this. You have to calculate. Remember one thing, the moment, for example, when you start your own business, when you start a business with your own money, it is the business as a structure where you rent that particular place and you are the straight to that business. Those are the guys who are supposed to pay. But when you borrow money to start a business, now you're having more people to pay. You have a bank loan to pay. You have yourself to pay. You have the landlord to pay. You have the government to pay. You have workers to pay. And when you borrow money from a bank, you have to first establish, will I not only manage to pay this debt to the bank, but also pay me and also be a substantive benefit to my business? You see, people only analyze one thing. Am I able to pay the bank? When the answer is yes, then they get the loan. And that's why they ask themselves, hey, I borrowed the money to start the business or to pump in some whatever in my business. I managed to pay back the loan, but I was still left without the stock. Why? Because the only analysis that you did was, can I pay the loan? Yes. That shouldn't have been the end of that question. You should also ask yourself, am I able to pay the loan? Yes. Am I able to make money out of this? Because for God's sake, I'm not here to make the bank's money only. Don't have a problem with them making money from me, but can I also make money from them? If the answer, they are making money, I am making money, and the business is staying afloat, am I on a healthy place? Yes. Then go ahead and borrow that. So you're supposed to understand those two different questions and those two different numbers. So when you have those understandings or that understanding, then it becomes easier for you to be able to not get yourself into the financial crisis as far as the debt is concerned. This is good, Joseph. In case you are in debt, oh my goodness. That is my number. Take it up. Shoot me a text or a call on my WhatsApp. We talk business. See you in the next one.